In the wake of the current market storm, healthcare stocks proved themselves to be resilient, which gained them praise from notable analysts. Walter Todd, Chief Investment Officer at Greenwood Capital in South Carolina, believes that healthcare is one of the last opportunities to play defense at a reasonable price in the current market situation, according to a Reuters report. Hey, welcome to Stock Market Mate. Today we will take a look at the best healthcare stocks to buy now. Before we get into it, subscribe to the channel and hit that notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. Number 10. Royalty Pharma. Royalty Pharma is one of the leading American buyers of biopharmaceutical royalties, funding innovation across the biopharmaceutical industry. They partner with innovators from academic institutions, research hospitals, and not-for-profits, small and mid-cap biotechnology companies, and pharmaceutical companies. On January 6, Royalty Pharma announced a $0.19 per share quarterly dividend, which is an 11.8% increase from its prior dividend of $0.17. The dividend is payable on March 15 to shareholders of record on February 18. As of the third quarter of 2021, Insider Monkey identified 20 bullish funds from Royalty Pharma, which stakes totaling $1.96 billion. Adage Capital Management held the leading stake in Royalty Pharma, with 24.6 million shares worth $892.5 million. Number 9. Sage Therapeutics Incorporated. This Massachusetts-based biopharmaceutical company provides medicines to treat central nervous system disorders. On January 6, Needham analyst Amy Fadia raised the price target on Sage Therapeutics Incorporated to $85 from $79 and kept a buy rate on the shares whilst naming the stock Needham Top Pick for 2022. And affirming its position on Needham's conviction list. The analyst is positive about the stock's setup this year with several pipeline catalysts. In the third quarter of 2021, 22 hedge funds were bullish on Sage Therapeutics Incorporated, down from 27 funds in the quarter earlier. D.E. Shaw held the largest stake in Sage Therapeutics Incorporated with 1.25 million shares worth $55.6 million. Number 8. Biorad Laboratories Incorporated. This California-based manufacturer specializes in technological products for life science research, medical laboratories, and clinical diagnostics markets. Publishing its Q4 results on February 10, Biorad Laboratories Incorporated reported earnings per share of $3.21, exceeding estimates by $0.34. The company's revenue over the period totaled $732.77 million, surpassing estimates by $825,500. Analyst Patrick Donnelly raised the price target on Biorad Laboratories Incorporated to $800 from $750 and kept a buy rating on the shares after the Q4 results on February 11. The company guided 2022 well ahead of expectations, the analyst told investors in a bullish note. Number 7. Teladoc Health Incorporated. Teladoc Health Incorporated creates virtual healthcare services on a B2B basis in the United States and internationally, offering medical opinions, AI and analytics, and telehealth devices. On February 11, Goldman Sachs analyst Cindy Motz initiated coverage of Teladoc Health Incorporated with a buy rating and a $121 price target. As the global leader in the virtual healthcare space, Teladoc Health Incorporated is uniquely positioned to advance the overall integration of digital into healthcare, paving the way for the healthcare technology sector to become more disruptive, the analyst told investors in a research note. According to Greenhaven Road Capital, Teladoc Health has evolved from being a Zoom solution for doctors to a much broader swath of comprehensive service offerings, including the delivery of mental health care, the monitoring of chronic conditions, lab testing, and specialist referrals. This scale enables it to provide a comprehensive solution for a health plan or a company making selections for large groups of patients. Number 6. Seagen Incorporated. Seagen Incorporated is a Washington-based biotechnology company that creates antibody-based therapies for treating cancer. Among the hedge funds tracked by Insider Monkey, 40 funds were bullish on Seagen Incorporated in Q3 2021, up from 37 funds in the preceding quarter. Publishing its Q4 earnings report on February 9, Seagen Incorporated posted a loss per share of $0.95, missing estimates by $0.08. Revenue over the period came in at roughly $430 million, surpassing estimates by $28.18 million. Oppenheimer analyst Jay Olson lowered the price target on Seagen Incorporated on February 11 to $162 from $198 but kept an outperform rating on the shares. While Seagen Incorporated delivered solid Q4 financial results overall with $176 million in Adcetris sales, management forecasts negative growth for Tuxia in 2022, the analyst told investors in a research note. While the guidance may be disappointing, he remains optimistic about the long-term growth with continued label and geographical expansions in the near term. Seagen Incorporated is a well-known healthcare stock among smart investors such as Teladoc Health Incorporated, Abbott Laboratories, and United Health Group Incorporated. Number 5. Zimmer Biomet Holdings Incorporated. This Indiana-based company manufactures medical devices such as orthopedic constructive products and surgical instruments. By February 7, Zimmer Biomet Holdings Incorporated declared earnings for the fourth quarter, posting an EPS of $1.95, missing estimates by $0.03. Zimmer Biomet Holdings Incorporated's revenue from the period was $2.04 billion, missing market consensus estimates by $28.63 million. Loop Capital analyst Jason Witz lowered the price target on Zimmer Biomet Holdings Incorporated on February 9 to $140 from $165 after its Q4 earnings miss and FY22 guidance but kept a buy rating on the shares. The company has a more conservative approach to COVID-19 than its peers, assuming another full year of impact from the pandemic, while its peers expect at least some easing in the second half of the year, the analyst told investors in a bullish thesis. Number 4. Anthem Incorporated. Anthem Incorporated is an Indianapolis-based firm which offers healthcare benefit plans to individual customers, small and large employers, and Medicaid and Medicare markets. At the start of 2022, it served approximately 45 million medical members through its affiliated health plans. Over the last 12 months, shares of Anthem Incorporated have recorded an increase of 30.72% and 11.98% so far in the year as of May 27. On May 4, Mizuho analyst Ann Hines gave Anthem Incorporated a buy rating and a price target of $545, up from $510. Out of the 912 elite hedge funds tracked by Insider Monkey at the end of the first quarter, 69 hedge funds were shareholders of Anthem Incorporated, with combined stakes worth $5.7 billion. This shows improving investor confidence in the firm over the previous quarter, where 63 hedge funds reported bullish bets on the company's shares. The largest shareholder of Anthem Incorporated in the first quarter was Eagle Capital Management, with a stake worth $1.16 billion. Just like Pfizer Incorporated, Johnson & Johnson, and CVS Health Corporation, Anthem Incorporated is one of the top healthcare stocks that hedge funds are buying. Number 3. Abbott Laboratories. Abbott Laboratories is a global healthcare products provider that targets several areas such as medical devices, pharmaceuticals, nutritional products, and medicines. It is one of the oldest companies in the US and is headquartered in North Chicago, Illinois. Abbott Laboratories' resilience to unexpected disruption was evidenced by the infant formula crisis in the US, which saw the firm handle the crisis within months and left its share price unaffected. The firm also has one of the strongest portfolios of COVID-19 testing devices in the market, beefing its ability to benefit from the virus's resurgence. It also pays a 47-cent dividend for a 1.73% yield. Abbott Laboratories' largest investor is Ken Fisher's Fisher Asset Management, which owns 9 million shares worth $1 billion. Number 2. AbbVie Incorporated. AbbVie Incorporated is an American pharmaceutical company that sells medicines and treatments for several diseases such as psoriasis, pancreatic diseases, constipation, and glaucoma. It is headquartered in North Chicago, Illinois. AbbVie Incorporated is diversifying its product portfolio and has added 2 new drugs to its list that have a combined estimate sales of $15 billion by 2026. Additionally, and more importantly, except for one drug, none of the company's products have their patents expiring this decade, indicating a strong revenue pipeline. To add a cherry on top, AbbVie Incorporated has a $1.41 dividend per share for a 4.02% yield. AbbVie Incorporated's largest investor is Peter Rathjen's Bruce Clark and John Campbell's Arrow Street Capital, which owns 4.6 million shares that are worth $754 million. Number 1. United Health Group. This company ranks as the largest health insurer in the world. It also operates one of the biggest PBMs. United Health was founded in 1977 and it has a strong track record of paying shareholders regular dividends. The company is headquartered in Minnesota and its provider network spans the country. The company's size, stability, and dividend make United Health Group one of the most attractive payer stocks in the market. United Health Group could also soon move more into the healthcare provider market with its pending acquisition of home health services provider LHC Group. When you're considering a new investment in healthcare stocks or any other market sector, doing your due diligence is always the first step. While the large cap stocks listed above can be very safe bets, more volatile small cap biotech stocks can be incredibly risky investments. Well, that's about it for today. If you found this video helpful, kindly click the like and subscribe button. Also, let us know which one of these stocks we mentioned that you would like to buy, and you might want to leave a comment below. We love hearing from you. Thank you for watching, and we'll see you in the next video.
If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!